We're going to analyze Bitcoin and Ethereum, giving great importance to the recent event we've experienced in the crypto market, as this drop and structural break has been confirmed as a trap, as you'll remember from previous videos. We were observing something like a downtrend channel and identified. When the price had already reached it, that's when we identified a market extreme. And you know what we think at Infamy Crypto about market extremes, as the equivalent for Ethereum was defining it for us? This defensive zone. Notice how the price came to attack just at that moment when Bitcoin was going to look for that downtrend channel floor macro. And back to Bitcoin, knowing that it was tremendously useful to look for the floor of this structure, we are now going to give the value it deserves to this event. With the colleagues from Crypto Insight, we were already looking, so to speak, desperately to be buying this drop, since structurally and by cross-analysis, all the signs and signals we saw in the market indicated that the next big opportunity, rather said the imminent one, was to be buying said drop. We focus on the value area, right? And we always say this: when the price leaves the value area, what does the price need to do? When the price leaves the value area, what does it do? Anyone have the answer? Okay, that's the answer I like the most by far. You all said it right. You all said it right. But let's say that the most academic definition is that when the price leaves the value area, it tends to return to the value area to seek that liquidity that the market is telling it where it is. That's what the price does. Okay, we're in a context where Bitcoin has taken off strongly. Question: can we say that it's a point of no return, where it's 100% impossible for this to rise? Well, the answer is no. We're not at a point that is 100% impossible, because even though we have that medium-term bias, to be bearish, we don't have an ego. And if we're wrong, and if this is a typical final trap of the price of a reaccumulation process, and it's the final trap that tells us, hey, I'm going back to value, the strength that has to come out the other side is strong. Frankly, no idea if this will happen or not. But well, hence the hypothesis of other structures, but the hypothesis of, hey, let's buy this drop, which was what I told you on Tuesday. That was the idea to work on. Buy. Try to buy the drop instead of selling it, which, well, you have seen members who have been selling in advance and have done better than anyone else. But you understand me, I speak of the discourse that I told you. There is the idea of realizing that we can be in that typical previous classic detachment scenario when we move further away from the value area. Do we have guarantees that this will happen? Neither do I. I mean, I wouldn't bet much in favor of it, but that doesn't mean that the discourse we launched on Tuesday is to buy the drop, because the most prudent thing, call it what you want, is to buy there, not so much to sell. Even though I have a medium-term bearish sentiment, now is not the time to sell. Well, as you've just seen, it made a lot of sense to prioritize those longs over shorts in the market in this area, and zooming in here and going to the 15-minute time frame. Also, in a live session of Crypto Insight, we were observing when the price was approximately in this area that we should prioritize increases in Bitcoin's price. This can keep going up, it's a zeta, so we shouldn't oppose the gravitational force. Do you understand? If they throw a truck at you from a building, don't try to be Superman and try to stop the free fall of a truck from a skyscraper, not from the 200th floor. Don't be the smart one in class saying I'm strong. I can stop the truck from falling. That's equivalent to this. This is a zeta. It will keep going up as long as it wants. So let's not try to turn the zeta around, okay? Returning to the present and seeing that this Bitcoin trap has already been more than confirmed. Now what we are going to put on the table is to work on a volume profile regarding this whole area. And what we identify on one side is the value area high and the value area low. And when we see this kind of events in which we move away from the value area, where investors have found it tremendously comfortable to exchange buys and sells, when we see this kind of excursions with such bad intentions to then return to the value area, the market sentiment for a medium-term short becomes positive. And we know this thanks to the confirmation of a recent event. Now what we are going to do is to focus in here and analyze the inside of the candles to understand what really happened. Now you are seeing here the same trap in a 4-hour time frame. Look how in the big drop, where a delta clearly oriented to the beat predominates. Look how the node of higher transactional volume is actually green. It's where the ASC predominated over the beat, being able to offer a reading in which that drop was being bought. Well, here perhaps some member of the Informa Crypto crypto premium community has been buying. There may be their liquidity. Look how here traders with contrary ideas who were selling an already extended drop. You know, that's the worst of ideas. Here they were absorbed and trapped. And notice how in the whole trap scenario, how those buys start appearing, all those buys on the trap scenario that give it the necessary push after trapping some poor unsuspecting individuals. And yes, they can push the price up. Now, what we are going to observe is how in the recent rise in this 4-hour chart that we are experiencing now, we are going to analyze where those nodes of higher transactional volume of the rise are, and we place this at these price levels. It will be an interesting area to pay close attention to. And now we are going to share with you what we think could happen with the Bitcoin chart. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. And back in the traditional chart, look how we have extended this area of great interest where we can expect some kind of reaction in case of a threat. Well, if you look and we go to a micro time frame of 15 minutes, what we identify as a strong impulse. An impulse promoted, as you can see, with a lot of volume in this candle, which ultimately is the candle that recovers a whole defensive zone. Of course, it was going to have to recover it with great aggressiveness and after such a purchase at the price. They have given continuity with a channel, followed by a range, ending in a bullish climactic action. Of course, after the trap scenario, we are positive in the short and medium term for crypto. We had already been speculating on this possibility while the price was falling, but that doesn't mean that in a micro time frame we see that a slight correction could appear. We'll see if they do it and how far. What I do see clearly is an extreme limit level to defend the idea of looking up. In other words, the price. Who knows if very soon it simply comes, breaks our neck. But in the case they decide to correct by inertia, we assume that they would pierce that structure with force and would threaten the structure either with an impulse or with a search for a replica. And this area would be where the smart money should respond and move the price up. Of course, here we are not futurists at all, nor do we pretend to be, but we are looking for areas where smart money wants to defend its long idea. And remember, the price doesn't have to go back. The sentiment is long. Follow structures and see what they do to us. They can keep going up, but if they correct, a limit situation to go up again. And here we have the Ethereum chart. As you saw earlier, here we have identified a key defensive area, a market extreme. And in Ethereum too, with the colleagues from Crypto Insight, we were looking for post attempts to buy this drop, looking for long incorporations. And when the price was around this area, this is what we were saying about the Ethereum price in a live session with the colleagues from Crypto Insight. We know this from Bitcoin, that this is a Z. Ethereum doesn't let us see it. Here we see a click and a defensive zone. A click and a defensive zone. Okay, what can we think? Well, how to get into long positions? The prudent thing would be to wait for Ethereum to break through and on the test look for that purchase. Look for the purchase to continue. And now that we understand where we are going and where we come from, taking into account the trap that Bitcoin has set for us by recovering key structures, seeing that Ethereum has been working on a compression of market extreme. Look, notice at that price level, at $3,264, we identify the creek. And now what we are interested in doing is, regarding this creek, see what is happening here. And now in the order flow chart, everything you are seeing is inside the range. And here we are at the current Ethereum price point. Well, let's go back to the leftmost point where the range begins. Okay, notice as the price falls, they already set a key level for us. This is said by the volume. It's something objective. We didn't make it up. And it's for that reason that the price, at the current price point, is where they have sought this reversal in the price. But aside from that, let's go back to the beginning. This great aggressive drop, the initial one, if we go down, we will identify that at the lowest point. Unfortunately, there are sellers who tried to take advantage of their price after seeing a tremendous drop in the market and down there. They wanted to sell. That's what happens when you try to join a party too late. And what happens is that you enter the door at that party and they're already turning on the lights, kicking people out. And you have arrived there and paid for your ticket, and I'm sorry, but you're not going to enjoy that drop. And that's what we see here, trap sellers. Then notice how institutions, the ones who really control the market, go long in a way, let's say completely compulsively after experiencing a tremendous drop. And this, yes, is capable of pushing the price up. Now let's evaluate the part that matters to us, the recent drops. The last last one before going up, notice this drop. As you can see, the candle inside in the whole upper part. We're hardly seeing any transactional volume. All the transactional volume has concentrated in the wick and in the lower part of the candle. By inertia, we do see the price moving, but all this volume, honestly, did it want to gain just a few small points from the market, or did it want to smash it? That is the question an investor should ask himself. The answer is quite easy. It wanted to smash the market, and clearly it hasn't succeeded. That's why in the following bearish attack, here is where the buying force appears that is able to continue its purchase and lift the price to where they really want to direct it. And to top it off, in this last bearish attack, we see a clear drying up in the tape. It's the classic event we see when transactional interest is dissipating as we explore extreme and increasingly lower prices. Here, institutions are seeing that there is no real interest in continuing to sell. So get on the rocket, we're going up. What we have just understood is how they have really been absorbing very poorly positioned sellers and how the big institutions have been buying and continuing the Ethereum price on key structures. This allows us to see a sentiment with a positive bias. For this and other reasons in Informe Crypto Premium, we were prioritizing in the live sessions this bullish directionality, and this has been the case since the price was threatening with bearish attacks. Now, let's go to the 15-minute time frame and you will see that. Like Bitcoin, Ethereum has been working on an impulse, a channel, a range, and a bullish climactic action that seems tricky, and that thanks to the order flow. Analyzing the inside of the candles, we understand why the market has turned around here and not at the structural creek that we continue to defend in our graphing. Well, when we have such events, it is very normal for the price, at least temporarily, to turn around and go down. That is why we have decided to observe regarding this rise where the zones of greatest institutional interest are, and here I share them with you. Notice how in this recent rise what we have observed is where those clusters of higher transactional volume that support and defend this bullish rise are. Does this make these levels key? Does it justify the narrative in which if smart money wants to continue with this bullish continuity, a short-term correction should occur at this level of $3,060 for Ethereum, or at most at this level of $29,094 for Ethereum to defend the idea of long positions that smart money has, and whether from one point or another, continue the quotation and cryptocurrencies, and we'll see if it's to break the creek, but everything points to smart money being more than present. And if you're wondering, when can we get off this idea? The answer is, if you see that this level is breached, it implies that the smart money that has been defending the idea of buying has simply stepped aside. And if smart money steps aside and doesn't defend its purchase, my friend, I wouldn't be buying. And if you like this advanced technical analysis, let me know in the comments. Also, like the video, subscribe to the channel, and click the bell so that YouTube notifies you of future posts. I wish you good luck with your trades, and until next time.